they're not even looking at home. And it's not because of affordability, it's because that's not the lifestyle they want. What's happening is that we're at the effect of the headlines that are saying houses are unaffordable, sales are down, rents are down. So as investors, we're getting all of the bad news headlines. The best move to make right now is to look for deals in an economy that's really soft, because there are motivated vendors out there.
Yes, it's hard to find cash flow.
But okay, so
no, it's not. No, it's not. No, it's not. I want to stop that. That's not true at all. What is amazing about real estate, and I can't stress that enough, is with real estate, it's a slow moving train. You could see it coming from miles away, and you know exactly where it's going if you're tracking the right numbers. All right, Patrick, let's jump into the rest of the show because we got a ton to cover here. So let's start with the economy. And then throughout every different part of this, I want to talk about fearless predictions of where we think things are going in 2025. And I guess we should get grounded before we talk about each sector, like economy and population and the rental market and construction and so on and so forth. We should touch on the fact that, and get everyone who watches this show grounded in the reality that real estate is a long-term play. You should be thinking in 5-year, 8-year, 10-year increments, not 5 months, 10 months, or 15 months increments, Patrick. And it's too easy for everyone, including ourselves, Patrick, to get lost in that. And we start thinking too short term. But when you're looking at real estate, you have to have the long view. And that is 5 years, that's 8 years, that's 10 years, that's 15 years is the way you should be looking at it. And that's hopefully what we get everyone anchored into.
Well, you know, something that's interesting what's happening in the world because of the costs of housing and the lack of affordability, if you will. You know, there was a boom many years ago, or a book many years ago that I wanted to kind of mention again, it was called Boom, Bust, Echo, which was really talking about the demographics. This was a book written in the 90s, which talked about the demographics, you know, the boomers, you know, that big population, what they had to do to, as they moved away from home, buying homes, when homes were like 3 to 7 times income, for example, versus the 12 to 20 times that it is today. But the point is that in that book, we have to look at the demographics. So part of what we look into the future is going, what is the demographic shift that's happening today? We know that millennials, and they've moved on to a new demographic. I don't recall what they're called right now. But anyways, the point is that affordability has become an issue for that particular cohort. The next cohort, which I think are X's, I'm not even sure anymore. But the point is, they don't even want to own a home anymore. And I don't know if it's
Generation Z. Generation Z is next.
Yeah. Generation Z. So they're not even looking at home. And it's not because of affordability. It's because that's not the lifestyle they want. So it's interesting, the shift of demographics that we got to consider. But when we go back to considering looking into the future, what's happening is that we're at the effect of the headlines that are saying houses are unaffordable, sales are down, rents are down. So as investors, we're getting all of the bad news headlines, and we're thinking about what's happening right now as opposed to saying, okay, well, where is this going into the future? And that's the point of this particular conversation, is how do we look into the future? And this goes back to, what is the country doing? What is the province doing? What is the city doing from a economic point of view, and where do we see it going in the future? And that's what we're doing. We're investing into the future, JG.
So we want to talk about GDP, Patrick. Let's talk about GDP. What's our fearless forecast on where we think GDP is going this year, and kind of where we are right now?
Well, where we are right now is it remains flat. Arguably, we're in a recession. You know, certainly Ontario is driving the recession over the overall country, you know, given what's happening in Ontario, particularly Toronto, GTA. But having said all of that, when we look at what Canada as a, overarching kind of view, yeah, we're full on. It's going to be flat at best. I think we're going to get dipped negatively with the shift in government. They're not going to be hiring as much public service. That sector is going to get soft, and will get softer as we go forward. But ultimately, Canada economically, short of Alberta, Saskatchewan, ultimately is going to be, really flat at best, and arguably recession territory.
Interesting. I know there's a lot, I think there's a lot that is going to happen once Trump gets in. And I know that, the fact is what happens in China is going to also heavily play on the rest of this, right? And China's not depends on which side of the economy you look at in China, but there's some rough spots there for sure in China. And as a result, this is not helping us, and I'd be curious to see where that goes in 2025.
Well, I think you make a really good point, JG, which is we have to look at the global macro and say, well, what does that mean to Canada? And when we look at the global macro, it's been going on for 3 years now. We've got Russia-Ukraine war as one example of the many battles that are being fought. And ultimately that will have an impact, a ripple effect. We come back to, Canada when we consider what Canada is in the world and the lack of productivity that we have. So we as a country, and we started talking about the lack of productivity over 2 years ago when you and I first started shining a light on our general lack of productivity. The point is that now we're going to start feeling the effects of it. It's the lag that goes with it that is what messes people up. So on the negative side of it, we're seeing the lack of productivity start to really show up right now. Now, it's going to continue that way, but there's lag on the good news side of things as well when we look at real estate. And that's something that we have to consider, is there's a lag on both the bad news and the good news. So as these things shift and change. So let's just talk about just a quick example. So when we look at the fact that we're going to have a government change. Now, you're going to wait for the government to change before you start investing in real estate. I would argue that that wouldn't be the best move to make. The best move to make right now is to look for deals in an economy that's really soft, because there are motivated vendors out there. Yes, it's hard to find cash flow, but okay. So
No,
it's
it's not.
hard to find cash flow.
No, it's not. No, it's not. I want to stop that shit. That's not true at all.
Well,
I'll
it is
come back to
true.
it all.
No, but that's okay. You're right. It's not true. You and I know that. We've talked about it many times. But that's the story that many are telling themselves.
But that's a bullshit story. They want to tell themselves that story. They can go ahead, but it's not a true story.
It's not a true story. You're absolutely right. It's not a true story. If you're downtown Toronto, if you're downtown Vancouver, it's a true story. And certainly there are parts. And Vancouver and Toronto, they don't set the benchmark. They set the headlines, but they don't set the benchmark for the whole country. But people read into it because they don't get the concept that Toronto and Vancouver are our biggest populations. So they skew all of the numbers. So if you're listening to mainstream media, if you're only watching the headlines, you are going to get shut down and go, this is not the right time to invest in real estate. When we're arguing and we're pointing the business case for no, this is the time. And we can't even stress enough how important it is.
Now, Patrick, I want to touch on population, but before we get to population, I want to just reiterate one thing you said there, which I think is brilliant. Is it was essentially 2 years ago. It was 2 years ago today that we talked about, Patrick, how we were really at what we thought was the top, and there was signs showing weakness into the future. And you just said something interesting, is if somebody looked at that time and started making changes then to their portfolio and made decisions at that point in their portfolio, they probably made some phenomenal changes along the way. And now we're saying, okay, we're in weakness today, but the future, meaning 2 years, 5 years, 10 years, doesn't mean we're going to stay weak forever. So it is time to look into the future and to make decisions today. And that's what is amazing about real estate. And I can't stress that enough, is with real estate, it's a slow moving train. You could see it coming from miles away, and you know exactly where it's going if you're tracking the right numbers. And hopefully that's what that's what we're trying to do, which is why you need to like and subscribe. But that's why we do in this show, is to show you where the train is going. And that's more important than where the train is today, Patrick. And we can't say that enough.
Yeah, we can't say it enough. And people have, I think in general, have difficulty. You and I have difficulty. We get caught up in the headlines. We get caught up in the emotion of what's happening today, and we have to get grounded in where things are going. So let's just talk a little bit about the government change ultimately. We know that one of the platforms Polyev is on is to really get behind this concept of getting bureaucracy cut back and cut down, which should bring costs down. And, when we look into the future of Canada with some leadership, and will all his policies be awesome? And I want to just point out here, we have to vote policy, not politics. We have to vote policy, not personality. And when we look at his policies, when we look at what Polyev's put on the table for future policies, those are going to be good things economically. So we want to invest into a growing economy rather than chase a booming economy, as one example of when we look at where we see Canada into the future. Now is the time. And there's one thing I don't want to step over. And when we talk about, and we can show the slide about the value of, Canadian dollar, fiat currency in general, over 100 years. So $100 bill 100 years ago is worth about $5 today. And, understand something is, we can't stress this enough. The reason for investing in real estate now, like in this particular environment, if you will, is about wealth preservation. Our dollar is getting hammered. All fiat currencies are getting hammered. We need to get into hard assets. That is a wealth preservation conversation, and real estate is one of those hard assets that we believe strongly in. Some will do Bitcoin, some will do precious metals, and art and Rolexes, and there's all sorts of things. But the point is, you got to get your fiat currency put to work in hard assets.
Patrick, one of those, speaking of back to the government and policies, one of the policies that we're coming out of, and I'd be curious to see where we're going to the future.
So if you like these episodes and you want to learn more about what's going on with real estate in Canada, investing in real estate, and understanding how to invest in real estate the right way, head on down to the descriptions below, follow those links.